Good morning, traders and investors from each and every corner of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric. I'm one of the market analysts here at HFM. HFM linking you to the global market to assess various asset classes. Now, we said at the beginning of the year that it's going to be quite an interesting year, and by that, of course, we mean in the context of the financial markets. Now, before I proceed first, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could access this YouTube video at your own free time among other types of content that we post from time to time on our YouTube channel at HFM Kenya. Visit YouTube, search HFM Kenya, find our page, like, subscribe, and it is going to be helpful in bridging your educational gap through the various content that we post from time to time. On top of that, also consider sharing so that this content can reach more and more people, and it will be, and it is, and it has always been our commitment that we will keep on improving our content and making it even much more accessible and easily digestible for us to approach the financial market with the much more confidence that you require in order to take trading positions. Now, with that out of the way, we begin with fundamental analysis. Fundamental analysis to look at the forces moving the market. Now, we have had a mixture of data coming from the most influential country in the world, which is the United States. And just to have a snippet of it, I had prepared nice. So we have got quite a number of economic data prints from the previous weeks into the new year, some from late last year, and this is focusing on the dollar. And as much as we would want to pay attention to the headlines, which are caused by world leaders, which moves the financial markets, various asset classes in the financial markets, would also not get bralled by the veil of this news, but we would remember that inherently and primarily we look at the market forces by understanding the economic and geopolitical forces. Now, this is meant to display the economic forces. Here we have a myriad of economic data from JOLTS job opening, which came out soft, showing a weak dollar, ADP, automatic data processing, which came out positive, unemployment claims, which came out negative, and unemployment rate, which came out positive, core CPE, name them, and recently GDP, which came out negative. So we see a mixture of economic indicators, which is not inherently giving us a market bias. Now, might not be a good thing for swing traders and position traders because we like long-term, medium and long-term market direction, but it's also not so good news for scalpers and day traders. But hey, wait up a minute. Before we go into this, just a moment. Before we go into that, it is important also to note that we have quite a number of economic forces coming out this week. And all eyes are on CPI, Consumer Price Index. You could find all this economic data on hfm.com. Come to hfm.com, go to Tools, Economic Calendar, click in Economic Calendar, and pay attention to the ones which have got red folders full red folders to mean their high impact news. So we have CPI coming out tomorrow, Consumer Price Index, which is anticipated to be 2.9%, and the previous was 2.9%. So we see the prediction is to have it speculated at the same. Will it come out at 2.9? I guess we shall wait and see immediately after. But at the back of our mind, we know that we have got inflation concerns in the United States. In fact, in the global space, but we're paying much more attention to the United States because we know in economics they have proven to be sitting on the driver's seat in this regard. That is from the economic data perspective. Now, in the geopolitical perspective, we have got quite a number of happenings. Number one, we see the Donald Trump previous actions of imposing tariffs, which are taxes on imports from other countries like Mexico, Canada, attempts to impose tariffs on Europe, and of course China. We see China has been quite direct in response to this. And what China has done just yesterday during around 8:30 a.m. East African time, we saw that China has decided to invest heavily in gold. Okay, so we see China investing up to 27 billion US dollars in gold. This money is coming from insurers to reflect China's growth, investment in growth as a hedge. What we mean by this, China is responding to the uncertainties brought about by Donald Trump's tariff by buying gold in huge, humongous quantities, context defined. And the reason they are doing this is to hedge. And by hedging, it means using gold as a safe haven, as an alternative source of protection of the wealth of their nation, and trying to shield themselves from the uncertainties and fears brought about by the tariffs. Now, having this in mind, off to the charts. Now, our concentration today is going to be majorly on gold as we anticipate CPIs tomorrow to give us a much more needed direction for the market. So gold keeps on making history, and we just printed price above yesterday's candle, and now the gold is trading at 29.17 dollars. So this again is being fueled by the demand for gold brought about by the uncertainties happening in the geopolitical space. Somebody might care to ask, will we have gold fly to 3,000? Yeah, the possibilities are there, and this is because the uncertainties are much flowing in day by day, for lack of a better phrase. And as long as this continues, we will see gold being more and more bullish. However, for those who gold already left behind on its bullish momentum, there would be various attempts to wait for retracement, possibly on lower time frames, for retracement of price into areas of interest, and then continue getting in for the buys, of course, monitoring the geopolitical activities happening in the world currently. Now, if this is your first time to hear about the various assets that I have mentioned, some of the jargons I have mentioned, if they are new to you, and you'd like to get engaged more into these conversations, consider visiting hfm.com and register for an account. Leave your details there, and you'll have our experts get in touch. And today we have simply just had a short conversation about gold, which is a precious metal, categorized under commodities. As we walk into the future, it is our commitment to spark conversations around areas of interest in the financial markets, and we will be getting into other asset classes as times unveil and as new economic and geopolitical forces are in play to move the market in that regard. As a disclaimer, this by any chance is not financial advice. This is meant purely for information purposes. Kindly do your due diligence and remember to observe risk management. See you tomorrow during CPI. After CPI, actually before and after CPI, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless.